Yo, Garage Gang, it's your boy Avatar John, back in the driver's seat. And tonight's track is about to get wild. OpenAI's out here trying to rewrite the entire game. AI's not just spitting code, it's creating antibiotics. That's right. Artificial intelligence just helped discover a brand new drug. That's not science fiction. That's DeSci creeping up fast in your rear view. And then Anthropic rolls in and completely rebuilds the pit crew. We'll get to that. Because you already know what everyone's really here for. The money plays. Christian, or should I say Triple X, has been on an absolute heater. 2 straight weeks of trench wins, charts melting, calls so clean they're leaving skid marks. We've got those plays lined up, but you'll have to stick around for the lap. And yeah, we've got Lulu on deck with the full garage technical analysis to close it out. But first, before we drop the clutch, smash that like, hit that follow, and share this with your buddy who just opened his first Robinhood account, because in this garage, we break it down so everyone can understand. I'm Avatar John, and this is the Guru Crypto Garage, where money meets machine and the alpha never sleeps. Let's light it up. OpenAI is leading the charge. They're not just building chatbots, they're building workers. The new agent builder turns ChatGPT into a digital pit crew that can handle workflows, data, and ops from one command. No code? Kinda. It's low code on rocket fuel. But even the best machine still needs mechanics. That's why Zapier and N8N still matter. They're the old school workhorses keeping the engine steady while OpenAI experiments with warp drive. Agent Builder isn't replacing automation, it's evolving it. And they're not alone. Anthropic, DeepMind, xAI, Jipu, all fighting for compute dominance like car makers in a horsepower war. Every upgrade burns megawatts. Every new model tightens the grid. NVIDIA's H100s and B200s are selling for supercar prices. CoreWeave and Oracle are building data cities, and power grids are starting to sweat. That's why the crossover with crypto isn't optional. It's destiny. Projects like Render, BitTensor, and Akash are tokenizing the very thing these AIs run on: compute itself. You supply GPU power, you earn yield. You rent horsepower, you own the network. That's DeFi for data centers, the new oil of the digital age. So when people say AI is the future, nah, it's the engine. Crypto's building the fuel system. We just teased AI building antibiotics. Now let's talk about how it actually went down. MIT and McMaster didn't just ask AI what works. They asked it why it works. They used a generative model called DiffDoc, a system that predicts exactly how new molecules stick to bacterial proteins. Here's the play. The AI samples millions of chemical structures. DiffDoc refines them and then predicts the perfect pose, the way a molecule locks into a protein like a key in an ignition. Then the lab teams validated it, and it hit. They mapped the target, nailed the mechanism, and discovered a new antibiotic that kills IBD-related bacteria cold. That's not suggestion. That's explanation. AI going from guessing to knowing. They call this next-gen setup a multimodal LLM graph hybrid. One model handles the language and reasoning, understanding the chemistry text and the goals. The graph module handles the structure, building molecules, mapping atoms and bonds, testing fit. Together, they turned years of discovery into months, and here's where it ties back to crypto. Projects like BioProtocol, VitaDAO, and Molecule are building the rails for exactly this: staking compute, sharing datasets, and funding discoveries on-chain. If your model finds the right molecule, you own a slice of the IP. Medicine becomes a tokenized asset class. Science backed by yield. That's DeSci, decentralized science, running on digital horsepower instead of bureaucracy. AI's not just writing papers anymore. It's inventing cures, and the garage believes that's $1 billion pit lane opening right in front of us. Right after MIT lights up the lab, Anthropic steps onto the track and rebuilds its entire pit crew. They bring in Rahul Patil, the same man who ran Stripe's global payment rails. That's not a management hire. That's a horsepower swap. He's tuning Claude the way he tuned fintech: low latency, fault tolerant, always on. This move isn't about marketing. It's about control of the rails that move intelligence. Stripe taught him how to move money. Now he's wiring an AI that moves decisions. Every inference, every response, every transaction routed like a financial packet through a neural highway. And here's where the pit smoke gets interesting. This is the moment programmable money meets programmable cognition. The same logic that built global payments is being repurposed to move data, compute, and value inside large language systems. It's the prelude to AIs that can spend, settle, and reinvest without a middleman. So when the garage says Anthropic rebuilt the pit crew, we mean they bolted a fintech engine into an AI chassis. And the garage has its eyes locked on that hood. because this is the junction where finance, compute, and autonomy start sharing the same track. The garage has its eyes on this, and you can feel it. A full-blown power shift happening right now. OpenAI isn't just building the car anymore. They want the whole track. They want the fuel, the pit crews, the stands, and the broadcast rights. They don't want to sell you a tool. They want to own the entire digital highway. A one-stop shop for everything online. Your search, your workflow, your social feed, your data, your agents, all under one roof. Less bolt-ons, fewer integrations, end-to-end, frictionless, controlled. That's not convenience. That's dominion. And every other titan wants the same trophy. Meta, xAI, Google, Sora, all fighting for total ecosystem control. They are just making new cars. They're building their own highways and toll booths. Each wants to own the loop. Compute, data, content, and distribution. Now let's clear the air, because I keep seeing people mash them together. OpenAI isn't Sora, and Sora isn't xAI. OpenAI runs ChatGPT and the Sora video model. xAI runs Grok inside X. That's Elon's world. Different garages, same race. Every one of them chasing the same finish line. Dominance of attention and compute. And don't forget the king of the hill, Google. Let's face it, until about 5 minutes ago, Google owned the whole track. They knocked out Yahoo, buried AOL, and made to Google a verb. Nobody ever said, go Bing it, or Yahoo me a restaurant. For years, it was just Google. They were the internet. But this time, they don't have that edge. The race has changed. OpenAI's stealing the spotlight. xAI's pushing into X. Sora's rewriting social video, and Meta's grinding gears in AR and AI avatars. Google's still in the game, still fast, but they're no longer the only engine on the grid. And speaking of Meta, Zuck doesn't like being last. You can feel it. Meta's in the lab cooking something massive. AI avatars, AR glasses, full-blown neural interfaces. Whatever it is, it's coming and it's gonna shake the stands. These giants aren't just building apps anymore, they're building worlds. This next war isn't about social clout or ad revenue. It's about controlling the operating system of reality itself. And right in the middle of all this chaos sits crypto. Because while they're all trying to close their systods, crypto stays open. Permissionless, transparent, composable. They can build their tracks, but they still need our rails. They can own the engines, but we're holding the fuel. That's why the garage calls this the AI arms race. OpenAI, Meta, Google, xAI, all fighting for the same edge. And crypto's the neutral zone, the open pit where every one of them will have to refuel. The future isn't company versus company. It's closed versus open. And the garage knows exactly which side we're on. Now, let's bring it back to the markets, because all this AI chaos on the track bleeds straight into Wall Street's pit lane. When OpenAI, Meta, xAI, Google, and Sora start throwing billions around, the tremors hit equities first. Every headline about new data centers, chips, or AI infrastructure ends up reflected in the tape. And today, the tape was screaming. AMD lit the boards on fire, spiked to 226 before traders slammed the brakes, closing just above 200. That's a mega cap move you don't see often. Pure adrenaline from AI GPU demand and blowout guidance. Call it what it is, a proof of concept rally. AI infrastructure isn't hype, it's an asset class now. When chips rip like that, it means liquidity's flowing back into the system, and crypto's next in line to feel the tailwind. The Atlas Red matches it, risk on, reflationary. China's pumping liquidity, Europe's neutral, the US dollar slipping under 98. Money's leaving safety and chasing growth. Bond volatility's asleep, the track's smooth, ETFs showing multi-billion inflows. That's institutions loading up before the next lap. TradFi's rotation, big tech cooled a little, but industrials, energy, and AI infrastructure caught the baton. The S&P's at local highs, NASDAQ coasting, VIX parked at 14, no fear, all throttle. Oil steady mid-60s, gold calm around 3,900 an ounce. Classic reflation tone. Here's the translation for the garage gang. The AI arms race we just talked about, it's the heartbeat of this market. AI chips, data centers, compute infrastructure, that's the nitrous feeding TradFi. And when Wall Street starts paying that kind of premium for AI exposure, you know what's next. The liquidity spillover into crypto. Atlas takeaway. Conditions are green, volatility's calm, and the engines are primed. This is where the smart money starts positioning before the green flag. Now let's take that macro pulse straight into the trenches. Because Christian XXX has been on a tear, and it's time to see where the real money's being made. Lulu is the heart of technical analysis, the teaching lab. All right, garage gang, lesson time. Lulu is the heart of technical analysis in this garage, and she ran the morning like a surgeon with a flamethrower. I'm going to show you exactly how she built the trade before the run to a new all-time high, where she got in, how she managed risk, and why she got out when she did. Copy this process, not the blind emotion. Lesson 1. Start from the top. The daily tells the truth. Lulu looked at the daily and saw the trend was clean. Price trading above the 50-day moving average, momentum up, and higher highs forming on the channel. That is her permission slip to hunt long setups on lower time frames. If the daily is broken, do not bother with the little dances. Lesson 2. The 1 hour is your swing lane. On the 1 hour, Lulu saw the exponential moving averages fanning up. The 21 above the 50, above the 100. That fan is your friend. Volume was starting to rise on green candles. Her rule is simple. If the 1 hour EMAs are stacked bullish, favor longs on the 15. Lesson 3. The 15-minute is the setup. This is where Lulu booked her entry. The 15-minute printed a clean breakout from a micro channel. Candles closing above the 21 EMA with rising volume. That is the signal she wanted. Multi-time frame confirmation. She entered when the 15-minute candle closed above the channel and set her initial target to the nearby resistance zone. For Bitcoin, Lulu entered when price cleared $124,400 on the 15-minute close. Her take profit was layered into the 126,000 zone, and her stop loss was tight under $124,000. Enough room for noise, small enough to protect capital. For Ethereum, Lulu jumped when the 15-minute pushed above $4,710, rode it to around $4,750, and kept a stop under $4,680. For Solana, entry near $234, stop under $232. For Cardano, think cents, entry around 87 cents, stop under 86 cents. Lesson 4. The 1 minute is for precision, not gambling. Lulu used the 1 minute scalper screen to time entries and trim profit. Fast EMA crossovers, quick RSI pops, and micro volume spikes were her triggers. You want to be surgical on this screen. In, out, flat, not buy and nap. If you are buying and going to bed, you may as well drop 200 on black and walk out for a smoke. The market does not stop. Lesson 5. Stops and sizing beat ego. Lulu always sets a stop before she gets cute. Position size equals risk tolerance. If your stop is 1%, make sure your size matches a 1% loss you can stomach. This is trench math, not bravado. The checklist Lulu used before pulling the trigger: daily trend above the 50-day moving average, trend confirmation, 1 hour EMA stack bullish, 21 over 50 over 100, 15-minute breakout or close above the channel with rising volume, 1 minute micro confirmation, quick EMA crossover or volume spike to refine entry, RSI not extreme on the 1 hour, no blow off exhaustion. When most of these lined up, Lulu pulled the trigger. How she managed the run: she layered her targets, partial profit at the first resistance, more at the breakout zone, and trailed a stop under higher lows. She did not let greed turn into gambling. When the market gave a pop and fade, she took the pop and left the house. Tools to use in the trench: sniper bots like Axiom, BullX, or GMGN. Eyes when you blink. Limit orders for entries, stop limits, or guaranteed stops for exits. Alerts on price, volume, and EMA crosses so you do not miss the tape. Never risk more than 1 or 2% of your bankroll or a scope scalp unless you know exactly what you are doing. Example: Lulu saw the daily trend, checked the hour for the EMA fan, waited for the 15-minute close above the micro channel, confirmed with a 1 minute spike, put in a limit, set a stop under the structure, and peeled profits as the run happened. That is the recipe, not luck. By the way, none of this is financial advice. The garage is education and entertainment. Lulu runs the tech pit like a four-hoofed pig with a snout for price action. I will put her up against the so-called experts on crypto Twitter any day of the week. But if you are taking financial advice from a pig, you probably deserve to lose your money. Stay smart, stay sharp, let it rip.